Today, we will also see IREDA. One of the time, this was a darling stock for YouTubers. One side was praising the stock for the rally, one side was actually cursing the stock for the rally, because from the IPO, it has gone somewhere around 465% within kind of 2024 to July 2024. Within few months, it has gone. But what has really happened now? You are seeing the reality. Again, this chart does not show the last 3 months price action because of the SEBI regulation, but lessons are there to learn. Today, we will study this stock from the perspective of fundamentals, from the perspective of technicals, from the perspective of business also. So let us get into the video. And the darling stock of people, when it is rallying, it is actually giving a rally. See, upper circuit, lower circuit and all, actually it was doing. But see, I don't see any problem in the business, but there is always a sweet spot to buy the good business at the good pricing, at the good valuation, I would say. So right now, when I was scanning the opportunity, this came into me, and the previous memory of IREDA YouTube videos, it got into me. So I just thought I will start with that. When you see the technicals, it is right now, not right now, before 3 months, it is 58% down from the all-time high. What the stock which rallied like anything, right now it is discounted by 58%. If it has to go to the same all-time high, then it has to make 100% or 133% of return from now. I don't know where the price is currently, but it has fallen 50%. So which means it is giving an opportunity for 100% if it's a good stock from the fundamental perspective, from the business perspective. Let us study it. And screener, IREDA. Okay. So 35,000 crore. Currently, it is a mid-cap company. What the business is doing, let us study by clicking the link of the website. It is asking English or Hindi. Let us choose English. See, the company is ideally providing loans for the infrastructure that are needed in the power sector. There are two things I wanted to highlight. Power sector is not going to go anywhere because you use electricity everywhere and anywhere. Now, the requirement of power with the current situation of geopolitical sense, that is going to be massively increasing. So, there will be so many infrastructure that will be coming out because of government push, not now, in future, because they wanted to secure, even though last time when Modi also, Prime Minister Modi also told about the energy security issue, there will be so many plans that will be coming out because at least from the country's sovereignty purpose, they have to keep the country safe in energy. If they wanted to keep this country from the oil crash, they need to build the energy infrastructure. For energy infrastructure, whether IREDA is going to build, no. IREDA is a financier for the infrastructure of the renewable energy. Just understand, there is a bifurcation. It is not going to give loans for the coal India. It is not going to give the loans for the nuclear. It is going to nuclear also, I think, renewable only. So it is going to give the loan for energy infrastructure which are focused on renewables. If you go to profile, India Renewable Energy Development IRDA, it's also the government has given Navaratna status for this company. IREDA is a public limited government company established as a non-banking financial institution in 1987, engaged in promoting, developing and extending the financial assistance for setting up the project relating to new and renewable resources, renewable source of energy and energy efficient conservation with the motto of energy forever. This is a right time for that motto to be actually realized, not realized, initiated. So many projects will be coming with a proposal of that we are going to save so much energy, so much renewable energy, and the company is going to give loans for those companies. From the business perspective, I don't see any challenge. It is going to have a good future because energy security is going to be the key area which any government in India, either it is BJP or anything, it is going to focus because it is a necessity of the country. So this business is going to have the future by giving the loans. Let us study the financials, how the company is actually executing, and whether it is efficient, whether it is in a good spot to consider or not. As I said always, the market cap is 35,000, stock PE is 18. Once upon a time, this PE, you think when it is peak 54%, 18, 54, net it is 60% down in the valuation perspective. If it is 60 PE, now it is 20 PE, then it is 1/3 it is reduced. So 60% reduction in the PE. That is a good sign. So 5-year PD, ROCE. Actually, let me ask a simple question. See, to the people in the meeting, debt to equity is 5.41. Even the net debt to equity is 5.34, but still I will work in this company. Why? Any response? Anybody can think of this? Why? Sorry?
An NBFC.
Yes, exactly.
It's an NBFC.
Because it is an NBFC, their role is to get some loan from place where the interest rate is less and give that loan to the infrastructure companies, whoever they wanted to actually develop energy infrastructure, and get the net interest margin as a profit. This is the business. When this is a business nature itself, taking loan and giving it to another person, like a bank, it's a non-banking financial corporation. So kind of NBFC, debt to equity ratio is not a problem. When debt to equity ratio is not a problem, considering ROCE is not a good choice. So I will discount ROCE, I will discount debt to equity ratio because it is an NBFC company. But when you see ROE, it is commendable, 18%, which is a good sign. For a non-banking company, sorry, not NBFC company, if the ROCE is more than 10, it's good. More than 12, it is good to actually consider. Now it is 18, it's a good opportunity for me. So when the PE is 5-year median PE is 27.5 and the current PE is 18, then that is also a good sign for me. 10-year median PE is 27. So that is also a green signal for me. So there is no pledge. Public holding is only 23%, down from 52 is 32%, down from 59, down from all-time high is 59%. See, when you see again going back to the basic concept where there is a margin of safety when the stock price is trading far below from the all-time high, but still the business is fundamentally good. Let us see whether the business is fundamentally good or not. As we already seen, the price is right now 124. Okay, it's down from 284 to 124. More than half it is reduced. As we see, 59% it is reduced. Whether this is the right time to consider opportunity, I don't know that. But whether it is the right time to study the business, yes, I would say yes. After studying the business, because again and again I'm saying I am not a SEBI registered advisor. I am just doing this for my educational purpose and my team educational purpose where I am serving the community. So I wanted to extend this educational video to you also so that you can understand practically how to study the business, and do not consider this as a sell or a buy recommendation. Consider this as an educational video and take your decision or consult your financial advisor. So from the PE perspective, it has actually been deeply discounted 54% to 54 to 18, which is 60% discounted. So when this is also good, I will go to the balance sheet. Balance sheet, fixed asset, there is no need of fixed asset, but I will see borrowing here. Borrowing means if they get more loan, they will be able to give more loan. If they give more loan, they will be able to make more profit. When they give 24,000 loan in March 2021, if you go to this, the profit was 346. When they give 49, which is double, then the profit is 4 times better. See, this is the 2024. This is the crux. In non-NBFC company, we see this. In the normal companies, we see this from the fixed asset perspective. When the fixed asset is going high, then the profit will also go high because business is expanding. So here, when the borrowing is going high, borrowing is 24,000 crore, the profit was around 346. When the borrowing is 49, which is double of the before 2 years, then the profit is 1,252. So it clearly indicates when the borrowing goes up, the net profit goes up, which is the basic reason why we invest in any stock, right? So I consider in the borrowing segment, it is actually increasing. It is in the top of all-time high borrowing, which means it will always serve as a source for all-time high profit. When you see the business in year on year, always go and view consolidated. Okay. So right now the consolidated figures you are seeing, if you see the consolidated figures, it is like all-time high sales, all-time high net profit. There is nothing wrong in the business because revenue is all-time high flying and financial profit is also all-time high, and they are marking the margin of 29%, approximately around 30% they are making, and the profit is also all-time high. From the quarterly perspective, if you see view standalone, okay, this is consolidated view. all-time high profit, all-time high sales and all-time high profit. If you see in the standalone view, because after the mergers, after the acquisitions, also if you see the standalone view, then also it is actually all-time high. So from the profit sales perspective, all-time high, I always go by the formula. When the sales is all-time high, profit is all-time high, sentimentally the price is discounted, definitely the price has to follow the fundamentals, follow the business trend. If you see, always we go to this to conclude P&L. Compounded profit growth is last year 23%, last 3 years 39%, last 5 years it is 51%. But when you see the price, it is deeply discounted. Since the price is coming before only 2 years, we don't have much data of 3 years, 5 years. But you know, when the price is growing, when the profits are growing, the price has to follow. So it's a clear opportunity for me to analyze, not to take decision. I also request you to analyze this and take a decision accordingly, and get benefited for understanding a market properly. And we will also see a small pattern, or we are always fond of this pattern, which is the support. It's formed. Okay, I will increase the touch points, the points. Here the price has come, 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 here the price has come. Resistance, if you see, it is somewhere here. The price has always went and come down 1 time, 2 time, 3 time, 4. There is always a resistance here. So if we clear everything, I am just putting the support and resistance. I don't know where the current price is. Okay, 3 months or 4 months before, it was in the support zone. If we take this opportunity, if business is good, opportunity is good at fundamentals, then we see the potential of 50%. Last time when it went to support, it gave this 50%. It gave the 50% in 113 days. This time it is not going, because there is always a reason, because the price, because the market has priced too much of cost. Then it is right now discounting everything, and right now it is consolidating. After reaching the support, it is consolidating for long time. That is also a green signal that after it is reaching to support, if it is consolidating for long time, the long time consolidation will have to give the return in again some of the time in future. I don't know when this will go. Again, I also repeat, I am not bothered about after the support. If it goes 20%, 30%, I will actually be prepared for averaging. If the fundamentally the stock is good, if the financially stock is performing good, then it's always a good opportunity for me. But it has a probability, and I don't know, it has a probability to go down also, because I am not sure when the price will go to the resistance. But it has to go, because business is all-time high, the price also will go to all-time high. I am not thinking about all-time high also here. I am just thinking about the resistance zone. If it has to go resistance zone, I don't know when it will reach, because always I repeat, there are two things not in our control: price volatility, which means price can go down also, we are not having any control. The price can take long time to reach the resistance also. Long time means what? If it takes 2 years also, I am making net 25% per year after taking the decisions. Then it is a good return from the perspective of FD, from the perspective of mutual fund. Understanding this business kind of financially, business wise and technical pattern wise gives us a better confidence and conviction to stay invested in such kind of stocks. Hope you have liked the video. If you have liked the video, please like, share and subscribe. If you have any questions, please don't forget to put it in the comment section. I will be happy to help you. If I have missed any points in this talk, just feel free to put it out. I will also learn with you. And that's it for today. See you in next one. Happy investing.